Heavenly Father, we just thank you for a day. Thank you for this weekend. We thank you for beautiful weather this weekend. Another week, Lord, of your provision and protection. We ask right now that you'll continue to bless this class, bless everyone who attends it, help them to be better managers of what you've given them, help them to grow and increase what you've given them to abundance, Lord. We just give you all the honor and praise on all things. We ask that their homes be protected and their families be protected while they're away. We ask that you please give me what I need to teach everyone that attends this class to prosper, Lord, and to do even more with what you've given them and what they already have. We thank you, Lord, for the opportunity, and we just ask your blessing in Jesus' name. Amen. So here's the waiver. My company, America's Anointed, along with this church, are not responsible for any losses you may incur in your trading as you embark on that. What I will teach you is what I do, but I am not going to recommend any investments for you, any stocks or bonds or any particular vehicles of trading, but I will show you what's been working for me. And if you decide to do what I do, then fine. But if you don't have the same outcome as I do, then I am not responsible. Okay. So that's basically what that does. Okay. Thought for the week. Now, last week I had a thought. Some of you weren't here, but my thought for last week was how, in the beginning, in the book of Genesis, God gave us everything. So, you know, in Genesis, it says, God said to Adam and Eve, of every tree in the garden you may freely eat. Every tree. Every tree, he said, you may freely eat and freely eat. So, what does that mean? That means they had access to everything and they didn't really have to work for it. You may freely eat. So, it was abundance of everything for them. And then, as you know, the enemy came, tricked Eve, and sin occurred. That sin removed the abundance that Adam and Eve had and gave it to the devil. See? So now Satan took it. He didn't have anything. And that's why it says in Scripture, the thief comes to, he's a thief. He comes to steal, kill, and to destroy. Why? Because he ain't got nothing. He's got to steal it. He's got to take it. God didn't give him squat. When he got cast down, there was nothing here. So he had nada. So the first thing he wanted to do was get from Adam and Eve what God gave to them. And that's what he did. And that's what he's been doing since. All right. So remember, that thought for last week was abundance started off. Then God started to work with his people. And remember, you know, Abraham, Moses, with the manna. Manna was only lasting for a day. They had to get it every day because it would go bad. And then the prophets with like Elijah, the miracle was performed through Elijah for the widow, and the widow was given food, but it was only enough for each day. So God provided for people in the Old Testament, but he only gave people enough for their needs. Then Jesus came in, and Jesus' miracles were different. Jesus provided miracles in abundance. So even with his first miracle, which we talked about weeks ago, at the wedding feast, when he turned water into wine, he turned water into wine, but he had over 300 gallons of wine for one wedding feast, which is enough for like a couple thousand people. So from his very first miracle to feeding the 5,000, everything he did in abundance. So he was showing us that he was now correcting what happened way back with Adam and Eve. He is taking back for us the abundance that we had at the beginning, and now we have it again through him. And his preaching told us that, and his miracles showed us that, and that's what we are to grab onto and have faith in, that the abundance is there for us. We just have to know how the kingdom operates so we can access that abundance. And then once we access that abundance, we have to know how to manage it so that we can keep increasing it and bless other people. And that's the whole premise for why he even came, other than, of course, to save us from sin. So this thought I had this week is that there's two kingdoms here. There's God's kingdom and there's Satan's kingdom. God's kingdom, there's freedom, there's profitability, there's abundance, and there's life. In Satan's kingdom, bondage, because he's going to tempt you into sin, which will keep you bound. Wages means that there's going to be a limit on how much you can make, because you are now, you could be a high wage earner or you can be a low wage earner. However, if you're part of Satan's kingdom, he's still setting the bar. If you're in God's kingdom, there is no bar. You set the bar. Mm-hmm. So lack and poverty, no. Lack is how Satan's strategies work from the very beginning. Because what did he say to Eve? He said, God told Eve, you and Adam, you can have every tree except one. Right? So what did Satan do? He said, well, why did he tell you you can't have that one? So what he did was he flipped the script and got Eve to focus on the one thing, the only thing she was not allowed to have. But she had everything else. There was one thing she couldn't have, and Satan got her to focus on that. And that's lack. Satan got her to focus on what she lacked. And she only lacked the tree of wisdom. Good. So, that's what he does to us. He keeps us wanting more. But not just wanting more. We were created to want more. Because that's how we create other stuff that's going to bless other people. So God put that in us. However, what Satan does is he gets us to focus on what we already have and just focus on what we don't have. And that's what he keeps doing. That's what he did to Eve, and that's what he does to us. He wants us to focus on lack, and if we focus on lack, that's going to lead to poverty. And of course, death, because the end result of sin is death. So that's my thought for this week. So, we are going to be focused on abundance, profitability, life, and freedom. Freedom from the tax man, freedom from your boss, profit, where you have profit that's not just from going up the corporate ladder, like
A lot of us are taught, get a good job, go up the corporate ladder. Some of us don't even have a daggone ladder. There's a ceiling. There's no ladder. So if there's no ladder, what are you going to do? Well, you're trapped. You're in wages. So we want abundance. And how do you get abundance if you're trapped? Is by investing what God's given you so that you can just depend on what you do and what God does through you for you to go up the corporate ladder. You're making your own corporate ladder. Okay? And of course, life is the end result of giving yourself to Jesus Christ, because without the Spirit, without Jesus Christ, without the Holy Spirit, you ain't got access to nothing, unfortunately. Now, Satan will give you access to stuff that he wants you to have, but there's going to be a price to pay for that. Okay? All right, that's enough of that. All right, let's talk about what's going on in the world. High inflation is still high inflation, right? They just raised the Fed just raised the interest rates again, which means that if you guys are looking for a house, hold on to your seat. It's going to cost you even more. If you're looking to buy a car and you don't have the cash for it, it's going to cost you. Credit cards, I wouldn't get another credit card right now because they're going to jack their rates up. I wouldn't do any loans of any kind unless it's absolutely necessary. And, you know, if you got kids in college or something like that, then yeah, Ron, sorry. You're gonna yeah, next year it's not gonna be pretty, brother. So that's what's going on. The market's still volatile, still choppy, still up and down. The NASDAQ is getting clobbered. All the tech stocks are getting hurt, big time. All of them. The big boys I'm talking about, you know. Tesla, PayPal, Google, Microsoft, they're all of them are down. Okay? But you can still make money. However, you have to be a trader, not an investor, to make money when you're going down, which we're going to talk about today. Again, the typical household is spending $445 a month more to purchase the same stuff that they purchased last year. Wow. Now here's some things that you can do to combat the effects of inflation. Bonds. I mentioned this before. When you guys do step 1, 2, and 3, you diversify your IRA, your Roth IRA, to a combination of bonds and stocks. And right now, I would have more bonds than stocks. I would maybe do like a 60-40 or at least a 50-50. Okay? Make sure it's in a Roth so that you don't have to pay the tax man. Okay. Something called I-bonds. I-bonds are federal bonds. They pay a higher interest than the EE bonds or municipal bonds or any other type of bonds. These bonds pay closest, you know, between 7 and 9%. And these I-bonds are a good investment because they're paying even higher interest than what the inflation rate is. Inflation is around 8 now. So if we have 8% inflation and your investments are only getting 4%, you're still losing, right? You're still losing. You need to have investments that are at least giving you as much money as what the rate of inflation is. Otherwise, you're losing money. And I-bonds will do that. Don't put your money all in one place. Diversify. Have a combination, and these are for investors now. You guys have your Roth IRA. You want to have a combination of stocks and bonds. Crypto too. Crypto has been taking a beating this year. However, there are some cryptos, which we'll talk about probably the last class, that will give you high interest to invest in. So crypto is still a good vehicle for fighting inflation. Gold's cheap right now, comparatively. So I would have some gold. And you can invest in gold in a few ways. You can invest in gold with ETFs in stock, or you can actually invest in physical gold. And you just do a little research, you can find out. I have some slides on some good gold exchanges where you can buy gold. Because I'm gonna tell you, long as we're on this planet, gold is going to be worth something. Trust me on that. Everything else may become worthless, but gold won't. Okay. What else does it say? You want to start earning interest rather than paying it? Yep. Consolidation. Yeah, like I said, stay away from, I would stay away from any type of loans. Even if it's a consolidation loan, it's just not a good idea. The inflation rate and the Fed is playing, I don't know when they're going to stop. They may jack the rates up again. So this is not a good time to consolidate loans. This is not a good time to just get into any kind of loan at all. Just, I wouldn't do it. Now, Ron, when your daughter goes to college, it would be okay if you, and anybody else who has kids, grandkids in college, for them to have a loan, because you can have a loan, but it's deferred until they graduate. So by the time they graduate, interest might be a lot better. So that's still doable, possibly doable. We don't know, 4 or 5 years from now what it's going to look like, but I don't think it'll be this high. I mean, right now we're in historic highs for inflation. Okay. All right, I-bonds again. If you want to take down, that's how you get them. Right now, it's 7%, 6.89 is the current interest rate on I-bonds. www.treasurydirect.gov. Treasurydirect.gov is how you get your hold of an I-bond. And they're not expensive. Says you can buy an I-bond with $25. Okay? So that's good to put in your portfolio. 6.89 is not bad. Get one for your kids. Get one for your grandkids. Instead of buying them an iPhone, buy them an I-bond.
That's right.
iPhone ain't gonna do nothing but depreciate over the years. I-bond will make money. All right? Everybody got that? Side-eye. Okay. Some who weren't here last week, I just talked about this just a little while ago, but we went over dividends, ETFs. We did some fundamental analysis on some stocks that you guys brought and wanted to look at, we talked about market sentiment, which is the tone, the economy, what's going on in the economy with corporate events and things of that nature, which is, what's going on with Ukraine and what's going on with certain, Elon Musk just bought Twitter, stuff like that. All that stuff has an effect on what's going on in the financial world. Especially when it's somebody like Elon Musk, who's the richest dude right now. So what he does matters. And then we did technical analysis. We started looking at the candlesticks. We looked at support and resistance, momentum, volume, volatility, and the MACD, which is the moving average convergent divergence, and how that affects the stock price. So if you wanted to be, either if you're an investor or a trader, you need to know these. Because even if you're just going to, even if you're going to invest in a stock and you're going to hold on to it for a number of years, you still need to know the fundamental analysis of, okay, is this a good company? How do I know this is a good company? What do they do? Are they making money? Are they losing money? Do they have a lot of debt? Do they have cash? You want to look at that stuff. That's fundamental analysis. And then there's kingdom analysis too. What actually do they do? Are they involved in something that's not biblical? You got to look at that. I do. That's why I don't invest in alcohol companies with tons of. I don't invest in the cannabis. Cannabis. A lot of people making money on cannabis, man. People make a ton of money on cannabis, but I ain't touching it because I know half of them ain't medicinal. All these people got ailments now. I don't think so. So I'm not investing in any cannabis companies. I'm not investing in alcohol. I'm not investing in tobacco companies. DraftKings, you can make a lot of money on that stuff, bro. But not me. I ain't touching it. Because all that stuff leads to sin, man. Gambling can be addictive. Cigarettes are addictive. Alcohol, I mean, I don't have to tell you. I'll stay away from that stuff. There's plenty to choose from without getting into that. Yes, sir.
How about the lottery?
What is that?
How about the lottery? Lottery?
The lottery? I stay away from the lottery, sir.
Okay.
And the reason why is because the Bible says, if you don't work, you can't eat. Well, lottery's not working. In my book, that's not doing any work. That's spinning the wheel, saying, all right, let's see if I can be a millionaire with this ticket. That's why most people that win the lottery lose their money. They end up broke. God designed us to create stuff. Playing the lottery doesn't create anything. He designed us to create stuff, to build stuff, to take what he's done, expand upon it, build it up, make it better, and share it. That's what we're supposed to do. So I don't play the lottery, and I know that it's going to be in the billions of dollars or something come Monday. They know not to even come in my office and say, Dennis, you want to buy a Mad lottery ticket? Nope, I don't. No, thank you. They say, all right, well, you'll be the only one at work then. I'm like, no, I won't. Y'all will be sitting right there at your desk on Monday.
Give you one for Christmas?
Yeah, well, I don't have any choice if somebody gives me one for Christmas. I got it. And I didn't buy it. I didn't buy it. So I do not play the lottery. Trading stock is the closest thing playing the lottery. And you have to have knowledge for this. All right, we're going to talk about swing trading. Your homework was to pick a stock. Now, last week's homework was to pick a stock that you think was good to invest in. And then 2 weeks ago. This week's homework was pick a stock you think would be good to trade. Pick a stock you think would be good to trade, which means you want to make passive income with it. You want to buy it and then sell it, make money, and then do it again. All right? So, swing trading is how you generate passive income. For those who either are not going up the corporate ladder or don't have a corporate ladder, this is one way you can create your own ladder. No, there's a lot of ways you can create your own ladder. Starting your own business, you can create your own ladder. Having a side hustle, as they say. And your side hustle turns into a business. And then your business turns into your job. And then your job turns into jobs for other people. That's how it's supposed to work. So, you can be a swing trader and you can earn money. You can earn money every day swing trading. Every day, every week, every month. Depends on how often you trade. It's up to you. And you don't have to start off with like thousands and thousands of dollars. I started off, I think I had 2,000. After I went to school to learn how to do this stuff, that cost me $5,000. I said, well, I don't have much money to even start doing this with now. I didn't spend $5,000 on the class to learn how to do it. And so I spent the year after I got my stock trading certification, the next year, all I did was paper trade. Paper trade means you're pretending you're trading. So you just log it, you do everything that you would normally do if you had the money. But you don't. So you paper trade. And I paper traded for a year. And I said, after the year, and I looked at my paper trades and I looked at the result of my paper trades, I said, man, I would have made money if I had actually done this. So the year after that, I said, I think I'm ready to start doing it. Because I was scared I was going to lose the little bit of money that I had. I was like, I don't want to jump in here and think I know what I'm doing just because I went to have the education. I got to apply it. So after a year, I started trading. And the first couple of trades were like awesome. I'm like, oh yeah, this is awesome. Because I think one of the first trades was Solar City. I'll never forget it. Because I read something about Solar City, which is a solar panel company. And I said, yeah, man, solar, everybody's going to be getting into solar soon. You're not going to be, whole fossil fuel and, all that stuff is kind of fading out and everybody's getting involved in solar. So I said, I found Solar City and it was cheap. And that's what, you guys should be looking for relatively cheap stocks, especially when you're first starting out. And it was cheap. It was like, I don't know, 10, 12, I don't know. It might have been under $10 a share. I can't remember. It was too many years ago. So I bought Solar City stock. And then I bought Hertz. So they're the two I remember. I bought more than that. But those two I do remember because they turned out to be like home runs. Because Solar City, I bought the stock. And then maybe not even a month later, I find out that Tesla bought Solar City, the company. Elon Musk bought the whole company. So my stock turned into Tesla stock. I was like, oh my God, I didn't see this coming. So now Solar City is Tesla. My stock went from like under 10 to over 200 because he bought it. And then it happened again with Hertz. Hertz had a stock split. and I forgot who, somebody bought in on Hertz and it split the stock, and I got basically double the price that I paid for it after that stock split. But anyway, that's how it started out for me. I was like, wow, this is great. So I said, all right, I'm on my way, and I've been doing swing trading ever since, and that was around 2019 because I got certified around 2015. 2015. In 2016, I paper traded, and then 2017, I started, just doing a little dibbling and dabbling. So from between 2017 and 2019, I was really in it, and doing swing trading pretty often. But I didn't start off, doing what I'm doing now, because I wasn't touching options. I was just swing trading. So I was just picking a stock, buying it, watching it, and then selling it when I thought it was a good time to sell and making money that way. I wasn't doing any options, which is how you guys should start off too. You just pick a stock, you buy it at a certain price, you sell it at a higher price, you make the money, you do it again. That's how you start. But I will show you how to trade options as well, which is even faster because swing trading, when you're buying the actual stock, takes a little bit more time. These options move. You can make money in a day. You can make as much money in a day doing options as you can holding on to a swing trade for a month. So this is my month of October, $3,700. Now, this is in which, you know how much money I used to make $3,700? My account is only $5,000. So with $5,000, I made $3,700. And I know if you look at the cost basis says $57,000 and the proceeds say $61,000. Well, that's misleading. I mean, it's true, but that's not my money. That's the broker's money because I trade on margin. So when you trade on margin, you're using the broker account's money to do most of your trading. And that's fine. They take out whatever fees they take out, but you still make money. So even though it cost me, I spent $61,000 to make $37, I only really used $5,000 because that's all the money I have, tax money that's in that account. Because I keep earning it, and then I take it out, and I put it in my bank account, and I earn some more, and I take it out, and put it in my bank account, and I earn some more, I take it out, put it in my bank account. So it's always going to be around $5,000. Because I ain't leaving it in there. I'm like, what's the point of making money if it's just going to sit? I'm going to use it for stuff.
So I have a question. This is the same broker account that you talked about last week that you.
It is. This is where I trade my options. So that's good. And as your account grows, it'll sit into your cash section of your broker account. And, I have it connected to my bank account, TD, so I just transfer some out. I need some for, my daughter needs to pay for her, she has to pay rent for college. She pays rent. So I'm paying for the rent. I take some out to pay for the rent.
Transfer? I'm sorry.
No, you initiate it. Yeah, I don't do the automatic thing because I never know how much I'm going to make month to month. So I determine how much of that I'm going to transfer to TD. Then I transfer it to them so that they can make their rent payment for their dorm park now. All college kids want apartments now. They ain't want no dorm. Yeah. I remember when I was happy to have a dorm when I was in college.
Right.
Now they all want an apartment. I'm an apartment dad.
Yeah.
please. I didn't get an apartment until I was a senior. Anyway,
I just have one question about that. You said that's the broker's money, right?
no,
Okay, I thought I heard you say well, I really can't see the numbers down there.
okay,
But you were saying that all of that didn't represent your money.
that's
Only
correct,
$5,000 was yours,
correct.
right?
So, in other words, I had to spend $57,754
Mhm.
to make the 3,700.
Right, but you said that wasn't all your money.
And this isn't. This is not. I only use $5,000 of my money. The rest of this comes from the broker company, because every time you do this and and you show that you are earning money, they increase your margin account. It's called a margin.
So
It's
that's
kind of
your-
like the broker's giving you a loan. So the broker's giving you a loan and they're letting you trade, because it's to their advantage that you keep trading.
Yeah.
Just like if you go to a casino, it's to their advantage that you keep pulling the arm and putting money in it, pulling the arm, and keep it, so they'll give you a couple dollars here, so you can keep pulling the arm. They keep you pulling another dollar, they keep pulling the arm. Same thing here. Broker accounts will increase your margin. The more you make, the more they'll increase your margin, because they know you're going to trade more. My margin account's almost 100 grand now. Because they know, they're like, this dude's making money. We want to keep giving him more so he can make some more. So they give me what I need. And I make more, and I transfer it over, and use it.
If it's a loan, then when and how do you pay them back?
They take a fee out.
So it's just,
Every time you make money, they take a fee out. So every time, that's why there's a difference between this number and this number. This is what it costs to do the trade. This is the difference between how much it cost me in margin. So they gave me 57, but it cost me 61 because they took their fees out because I used all margin. You see what I'm saying?
yeah.
So they take a fee out every time you trade. Each trade has a little bit of fee taken out for use of their margin. And you still come out on the upside because of the trade, the value of the trade, and how much the stock went up or down at the time.
And so if you lose, then what?
Then you lost.
No, I'm saying, so if it's, right. But if they're giving you money because they know you're going to be making money, if you lose money, are they taking something away other than their fee?
No,
That's what I'm,
no.
okay.
You still lost on the transaction, on the trade. So if you have an options play for, let's say it's a call option, and you're placing a call option because you think the price of the stock is going to go up. And if the price of the stock does not go up within the time frame of that options period, and it goes down, you lost money
Right.
on that trade. Plus, they're going to take their fee out, which means you've lost even a little more.
Okay, so you only lost what you've lost on the trade and their fee,
That's
nothing
right.
more.
And
Okay.
when you trade options, this is important, when you trade options, you can only lose what you've invested in it. You can't lose more than that, of course, plus the fee.
That's-
But
yeah.
if it costs you $250 to make the trade, you can only lose $250. And then their fee, which will be maybe a couple of bucks. So it'll be like $257.
Is 10%? Is it 10%?
Depends. This broker account is only 3.3%.
Oh,
And that's why I use it. Because their fees are low on options. And you gotta have a margin to trade options.
And which account is this? Because, I mean, which company is this that you use?
E-option.
E-option.
E
I know I
dash.
had it in my book when I had my book.
Yeah, it's called E-option.
so it's not in trade.
They are the lowest commission for options trading. You guys Google it yourself. You compare them against TD Trade. You see how much TD Trade's charging for their fees for margin. Ouch. But they're good. TD Trade's good. I'm not bad mouthing them. It's just gonna cost you a little bit more. Okay. So I just wanted to show you that, what's possible. Now this week, woo! This week, I almost made $1,000 a day. A day. Huh? That's awesome. I was averaging between $700 and $900 every trade, every day.
And that's just with the options? Just with the options, okay.
Yep. I'm almost here already. I'm at 3,700 already for this month. And you got to do this.
Yeah.
Whatever, if you're swing trading, whatever you're doing, if you're swing trading, keep a record. You got to have a spreadsheet. I can send you templates if you don't want to set it up. And all you got to do is just plot it in.
Not Excel?
It's Excel.
Not, it is Excel.
It
okay.
is, yeah.
Yes, please, sir.
But you need to keep track.
Yeah.
And why? Because you can look back and say, oh, I made money on that stock. Oh, I did it again. Same stock. You start seeing little patterns. And, you know, where you won, where you lost, what you did, how many, what was the contract amount? Quantity one, that's one contract, two contracts, three contracts. You know, what was the length of time? From the 6th to the 25th. This was a long one. This one was a short one, the 29th to the 3rd. This one's a day. 10/13 to 10/14, 10/13 to 10/14.
Wow.
I don't like making money slow, I'm sorry. I'm too old. I ain't got time for that.
Well, do you do a remedial class? Like, I'm not saying, because I'm getting what you're saying here, but like, for,
I haven't shown you how to do it.
so, but I'm saying, I'm getting so far, but I mean, like, where you, like, take my money and do this, or show me how to do it?
Yes,
Okay.
absolutely. We're getting there. We will get there. I wanted to show you, that's why y'all are here. You want to learn how to do this stuff.
Not that I have a lot of savings with my retirement income, I need to do something with it because
Hey,
I.
trust me, I get it.
Yeah.
And I didn't either. Like I said, after I spent the $5,000, I didn't have anything left. I had a couple thousand. I said, well, I gotta start with a couple thousand. Is it possible to start with a couple thousand? Yes. And keep building. So, swing trading. So you check your daily charts. Remember we were looking at those charts last week?
Yes.
So you check your chart, you have a particular stock you want to swing trade, so you go to the chart and you check it and see what it's been doing, how it's been behaving. So you take a weekly, you do a daily. I wouldn't go out too far because you're swing trading now, you're not investing. So for investing, you want to look at what it's done in a year ago, what it did 5 years ago, what it did, 6 months ago. For swing trading, you're really interested in what it's done short term because you want to get in and you want to get out and make your money and then do it again with another trade. So you want to look at daily, weekly, monthly. Okay.
So the larger gaps in a shorter period of time for swing.
Yeah. Yep. Large gaps in a short time. Gaps are a beautiful thing as long as they're going in the direction you want it to go. That's what happened to me this week. That's why I made so much money, because I had a couple of stocks that gapped up. And I was like, whoa, that's awesome. Oops, sorry. Okay, your 200-day average. Now remember, we talked about support and resistance. You guys remember support and resistance? Support is the plot line at the floor of the stock price on the chart. We can go back there if you need to view it, but so you see the candlesticks and its lowest point, like if you're looking at, let's say you're looking at a weekly chart and you can plot the floor price. If you look at a 200-day moving average, in other words, that's an indicator. So if you have one of those technical indicators, and one of your technical indicators is a 200 moving average, I use the moving average as an indicator too. And you can plot your support line so you know what has been the most probable floor price on that stock. And then you want your resistance line so you know what is the most probable highest point that stock has gone to in the last whatever days, weeks, months, whatever. That support and resistance helps you to measure where you could possibly you can put your stop loss at, or when it's a good time to buy it or sell it. So if it's near your support line right now, then that means it's a good time to get in, because it's been here, but now it's down here, so it means it's possible it's going to go back up. So that's a good indication that it'd be a good time for you to buy. I didn't mention this, but this is important. Check to see, and that's part of fundamental analysis, check on swing trading. You don't want to swing trade if the company is going to announce earnings on the day. Like if you wanted to get in, you're like, I'm going to buy this is good, this is going to be a good buy, and it's at a good price. But you need to check to see when their earnings are going to be released, because earnings always affects the stock one way or the other, up or down. There's always a reaction. And you want to stay away from that. You want it to do what it's going to do on a normal, everyday basis, not on an earnings announcement.
So how long do you wait after earnings?
The next day is
The
fine.
next day.
Next day or two.
Where do you look at to see when you're gonna?
Yahoo Finance will tell you.
Okay.
It'll tell you. You
Yeah.
put in the stock symbol, and you go to events,
Even.
corporate. It'll say events tab,
Okay.
and events will have. That's an event. Earnings announcement. Some broker accounts will tell you, like, and I think Yashins will tell you. I'll show you after I'm done. We'll go to the and a lot of broker accounts give you information. E-Trade will tell you too. E-Trade has a drop down, and you can find information about that particular stock right on the broker account. So once you think that's a good time to buy the stock because you think it's going to increase, as it gets up to your support line, that's going to give you an indication on when you should sell it. And that's why support and resistance is really important. Because the support and resistance can tell you when to buy and when to sell. So if it gets up to that support and the candles are green, that means people are buying, right? Red candles mean people are selling, right? So if it's up to support and the candle is red, that means probably that the price is going to start coming down again, so you may want to sell it before that happens. But if it's up to support and the candles are still green, you may want to hold on just a little bit longer to see if it goes up from there. Remember that chart I showed you where I made money? But if I held it just a little bit longer, I would have made even more money. And that's what happened. I saw red and I said, no, I'm getting out. But the next day, the candles were green and it started going back up. So if you have green candles and you're near the support and you're thinking that you want to sell your stock and get out, then you may want to hold on for another day and see, wait for one more day and see what it does.
I think I misunderstood something you said before. You said if resistant lines near the support lines, a good indication when it's time to buy. But now you
Buy or sell.
buy or sell, okay.
Yeah. So if your stock price right now is near your support line, that's a good time to buy because the price is cheap.
Okay.
Once you buy it, if it starts moving up to your resistance line, then that means it's time to get out, sell, and make your money. Now, if it ain't doing diddly, and it's still hovering around the support, you just gotta hold on and just hold on to it until it starts moving. Now, it could take a minute. I remember I had a stock, I was swing trading. It did nothing for months. I'm like, what is with this stock? It is flat, 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 flat. I mean, I'm telling you, month after month after month, it stayed flat. And I said, you know what? This stock's a dog. I'm getting out. Well, don't you know? I got out, and that stock went ballistic.
Oh, no.
It gapped up and took off, and I was out. I was so pissed. After I held the stock for almost 6 months. And as soon as I get out, it takes off. I was angry about that. I couldn't believe it. And that's, when that happened to me, that's when I said, I'm trading options from now on. I'm doing more options than swing trade. I still do swing trade, but that was it for me. I'm not holding on to a stock for 6 months and then find out I still didn't make money. So. All right. So, now, when you place your order, you've selected how many people have selected the broker account for your trading? Nobody?
Well, honestly, when you mentioned the e-options, because I thought about that last week, I think that's the account I'm going to use, but I have not actually selected.
Okay. How many of you have one in mind?
Well, I wanted E-Trade.
Yeah. I was
E-Trade,
looking at
good.
E-Trade, yeah.
E-Trade? Okay. Anybody else?
I got a Fidelity.
Fidelity? Yeah. You can trade in Fidelity.
Yeah, but you don't like E-Trade. You said you like the one you're doing better.
I have E-Trade too.
Oh, okay. But what was the other one you said you had?
Because I'm an options trader.
Options, okay, got it.
Can I ask you something? I have a Schwab account that I've done absolutely nothing with.
Okay.
What do you
They're
think
good.
of them? They're good.
Yeah. Schwab's and E-Trade are the same now.
Oh, okay.
So, yeah, I have an E-Trade account, I have an E-Options account, I have a TD Ameritrade account. You don't have to just have one. I do different things with each one, like my E-Trade, and E-Options, I use it just for options because of the low cost margin, low cost commission with options. E-Trade I use because that's the account. I have my 503, 529, and Coverdale account for my kids, plus I have an individual account in there because they allow me to trade penny stock or over-the-counter stock. All brokers won't allow you to do penny stock and over-the-counter stock. So e-options will let you do that. So I trade my penny stock on E-Trade. And then I have TD Ameritrade because TD Ameritrade gives you the opportunity to trade almost everything. You can trade crypto, you can trade penny stock, and you can trade foreign stock. So in other words, I can go to like the Hong Kong Stock Exchange and trade their stock on TD Ameritrade, or on other broker accounts you can't do that. Or I can go to the Canadian Stock Exchange and trade their stock. So they all, most are, you know, they have some differences.
This might seem like an unusual question, but some of the disclosures on E-Trade, I was a little bit concerned about. Do you have any concerns with any of this disclosures on any of the trading accounts? None, so you don't?
I do not.
Okay, all right.
I do not. As a matter of fact, it's my opinion that putting your money in a broker account is safer than even having it in a bank. Safer. It's more protected. They've got way more legislation and rules for your money than a bank does. They're insuring your money up to $2 million. A bank doesn't do that. When's the last time you heard about a stock broker account going in default? I can't remember any time. But I know about Sally Mae going down. I know about Chase going down. What do you think happened to those people's money? It's gone. So, I have no qualms about any disclosure with any of those reputable broker accounts.
Okay.
Now, other ones like, I just don't like Robinhood. I'm sorry. You guys you go for it if you want. That's just my thing. And Robinhood, the reason why I don't like Robinhood, even though you can do almost anything, they are too liberal, in my opinion. And why? Because they set up Robinhood to attract what's called the retail trader, which is us. We're retail traders, we're not institutions. So they created Robinhood to attract youth, kids. They made it an app. They know kids like doing stuff on the phone. They made it very liberal because kids don't have much knowledge about trading. So they broke down a lot of the typical rules and barriers that most brokers have, so that they can attract kids. And then what did they do? Well, when the meme stocks started going crazy, GameStop, you heard about what happened with GameStop, and what was the other one?
AMC, I think.
AMC, yeah, GameStop, AMC, yeah. There were the two main, there was another one. But anyway, what happened was, on Reddit, a group, not a group, but a ton of people got together that were part of the Reddit. There was a group, I forgot the name of the group, but there's millions of them. And they all decided they were going to trade GameStop and AMC. And they posted that that's what they were going to do. And because they knew that the institutional traders were going to sell it because they felt as though GameStop wasn't good company anymore. They weren't making any money, blah, 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 blah. So all the institutions were going to sell their GameStop stock. So the Reddit people, and I can't think of the organization, but they had millions of retail traders, kids, put out, we're going to buy it, and we're going to offset them who are going to sell it. And guess who won? They won, because the stock went up and it didn't go down. And they were all Robin Hood people. All those kids from that Reddit organization. It's a social media, you know what Reddit is, a social media website. And they all had this group. And they all put in their group, in their chat, that they were going to do this on this particular day, and that's what they did. And they were all on Robinhood, and they did, and it drove the price sky high. It did the opposite of what the institutionals were trying to do. And they made a bunch of money. And what did Robinhood do? They pulled the plug. They blocked them. They said, you can't trade this no more. I said, well, that sucks. The whole reason why they put the doggone company together is to attract these kids.
Right.
And then when the kids, pull a Robin Hood,
Exactly.
they pull the plug on them.
Wow.
I said, man, that's wrong. And that's what was it for me for Robin Hood. So I don't like their tactics with that way. They got some heat for that. They got some heat for that. So I'm not promoting Robin Hood. You guys can do it if you want. But I don't like it. All right, so you place your order. And we should do, let's see, do I have a screenshot? Yes. So here's how to place your order. So once you're on your broker account and you funded your broker account with $1,000, $2,000, whatever you can afford, let's say it's $2,000. So now you got a broker account, you got $2,000 in there. And you did your homework and you say, oh, I think this is a good trade. And you did your support and resistance on the trade. You did your technical indicators. You looked at your MACD. You looked at your momentum. You looked at your volume. Remember we went over that last week. Make sure there's a lot of people. Make sure there's at least 100,000 people buying and selling that stuff. And you looked at your moving average, and you're all good. You feel good about the stock. Now, while I'm talking about feelings, keep your emotions out of this game. Don't get emotional about your stock. Please, it'll drive you nuts. And you'll end up losing money because you're trading on emotion instead of what I'm teaching you. Don't get emotionally tied to your stock. I love Bed Bath and Beyond. I can't part with it. I can't do it. I have friends that fall in love with a stock because they keep going back and they keep trading it over and over and over. I'm like, man, you gotta let it go. If you're not making money, let it go. And don't look back. Just move on. There's thousands of stocks out there. Don't get emotionally tied to one. All right. So, this is how you place your order. So you have your symbol, which goes here, and the amount of shares that you want to buy. And this one has selected limit. So you have, here are your choices. You can have a limit order, market order, stop order, or stop limit order. That goes back to here. So you have a market order where you can buy or sell at the current market price. Okay? So whatever that price it's trading at the time you want to buy it, that's what it's going to be. Okay? So that's a market order. So if you select market it's gonna grab the price that it's trading at right at that particular time. Okay, and that's what the price you're gonna be locked into. If you select a limit order, then that means you set the price of what you want to pay for. You set the price. Now, it can't be ridiculous. If the stock's trading at 10 right now and you set the price at 5, you ain't getting it. Because ain't nobody gonna sell it to you for 5. I mean, remember, every time you buy or sell, it's got to create a transaction that somebody else has to do for you to get fulfilled. Okay? So every time you buy, that means somebody is selling it to you. When you sell, somebody's buying. Okay? So that's why the limit order has got to be close to the market price, or else it will not get fulfilled. Good to cancel. That means the order is good until you decide to cancel it. So it'll go whatever price you set, whether it's market or limit, that order will be locked in until you cancel it. So if it doesn't happen today, it'll happen and it'll go to the next day. And if it doesn't happen the next day, it'll go to the next day. So that price will stay there until you say, I'm going to cancel it and I'm going to set it different. I'm going to set a different amount. Okay? I usually do these two. One, for options, you can only do this one, but for swing trading, you can do either one. I usually do day order because I want to get filled. I want to be in and I want to be out. I want to get filled so I can see what it's going to do, make my money, get out. So I typically don't do good till cancel. However, you can if you don't have, if you really want that price and you want to wait until you get that price. Day order is only good for that day. So you set the price. If you want to set the price, you set your limit price, and it's going to be good for that day. After the stock market closes and you didn't get fulfilled, it's done, it's over. You got to do it over again the next day. If it's a market order, it's probably going to get filled right away. Whether you have it as good cancel or good for the day, it's going to get filled right away because it's going to just grab the price that's traded. Okay?
I have a question. I don't understand. I'm just going to ask you about the good till cancel. So say you put your order in for your stock. If you leave it at good till cancel, which I know you said you don't do, exactly how you tell them how many you want? Is that what you're saying? You're telling them how many stocks you want?
For the price you want.
For the price you want. You leave it at good till cancel, so it gives you the same, you're purchasing the same stock every single day? And
No.
so how, that's what
The order holds every day.
Explain, please.
So you've put in your order, like if you go to McDonald's and you say, I want a Big Mac. Okay, well, and the people say, well, we don't have any Big Macs right now, but we'll probably get some more tomorrow. Well, you don't have to keep going back to McDonald's and asking for the Big Mac. Your order's in there.
Right.
Same thing here. So you don't have to keep buying the stock. Your order's in, and your order holds until you get to the price. It gets to the price what you want, and then it kicks in.
But, so say you don't cancel it then. If you don't cancel it, then what?
Your order still holds forever.
Meaning you're buying forever.
No,
Well,
No.
you have a order that you haven't exercised or executed your order until it gets fulfilled. So you haven't bought anything. It's just a hold. It's like they put a hold on your credit card. If you want to buy something and it costs X amount of dollars, sometimes, like if we want to rent a car, they'll put a hold on it or if you want to
Right.
go to a hotel, they'll put a hold on it. It didn't hit your card.
Right.
It's the same thing here. You didn't really buy it. It's just a hold. So you're holding the stock until it hits the price you want. And then when it hits the price you want, then you've bought it. So you're not out the money, you didn't buy it, it's just a hold. So nothing happened, it's a nothing. Okay? But when you get when it gets to the price you want, then it kicks in and then you've bought it. You follow what I mean?
Yeah, I just didn't know if it went on into perpetuity, so apparently not. No.
It can be,
It can,
yeah.
so, okay, that's what I wanted to know.
It can be. It could be forever if
That's
you.
what I wanted to know.
Yeah, and like I said, like the example I gave, if you have a $10 per share stock and you put in a limit order for $5 and you put it in as good to cancel, that'll probably stay there forever.
Okay,
Yeah.
that's what I was trying to get.
So you don't want that.
No, no.
You want to get moving.
Right, that's right.
So if you want to get moving, then good to cancel is only when you're really firm about the price. And if you're not really firm about the price, this is the price I want, and that's, if I can't get it at that price, I'm not buying the stock. Then you do good to cancel, and you do limit. However, if you're not really all that set on the price, well, this is a good price, but if it moves up or down a couple cents, fine. I'm still good. Then you can do market. Okay? Most of my trades are market, if I'm swinging. And like I said, if you're doing options, you can't do market, you have to do limit. You have to set the price. Okay? Open orders, order placed, but not executed. So that's what happens if you're good to cancel and nothing happens because your price is not anywhere near where it's trading. So that's the open order. So your order is open and it's going to stay open until it hits the price that you wanted it to. One cancels the other. Limit orders that close automatically. Okay. So a limit order, if you have a stop limit, which is another choice, there's two types of limit. So you have a limit order, which means you set the price to buy or sell. Then you have a stop limit order, which means that you're setting the price to buy and you're setting the price to sell. So you want to buy it at X and you want to sell it at Y. And it's going to do it automatically once you set it. So that way it saves you from losing because you've already set the parameters of how much you want to lose if it goes the direction you don't want it to go in. Now, that's a good and bad. In my opinion, right now, it's not that good to use this, limit orders. Why? Because the stock market's doing this all the time. This year. It's up one day, down the other day, up one day, down the other day. It's very, 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 very volatile and very unpredictable. So if you've got a stop limit in there, it'll stop you out one day, and then the next day it might take off. You're like, darn, I would have made money on that, but if I put a stop limit on it, and it stopped me out. Okay? Here's what it looks like. Again, you put your symbol in, you put your number of shares. If it's a limit order, you put the price in. So you selected limit order. Extended hours, you really don't have to worry about that, but there are extended hours, believe it or not. I know the stock market chart closes at 4 o'clock, but you can trade after 4 o'clock, believe it or not. You can trade before it opens at night. Will it get executed before the stock market opens? No. It'll be a hold. So you can place your order, but it's not doing anything until the market opens.
and then it get executed with the price.
It'll get executed when the market opens, and if that price, if people like that price, it'll sell or it'll buy. It'll get executed for you.
So, can you go back, so when you place the order after market hours, so the price that is showing at that point is when what you're buying at, so when it opens the next day, it'll still be at that price?
Maybe.
Maybe.
Oh,
You don't know.
So you don't know,
No.
okay, that's what I'm not sure. Now, do you
So if you're
recommend-
doing an after hour, extended hours order, it's best to do it at market.
Gotcha.
Because you don't know where it's gonna be when the stock market opens.
Okay.
Yeah.
Do you recommend doing that after hours?
I don't do a lot now, I don't do a lot. Sometimes I do because I don't do it a lot, but I do it. I'll place a trade after 5
Mhm.
because I get wind of something.
Gotcha.
And I said, you know what, I'm not gonna wait until the market opens on this because I have a job and I gotta be at my desk doing my job at 9 o'clock, not trading stock.
Right. That's it.
So if I think it may be a good play, I'll place it right then and there, which is after 5, could be, God knows when, it could be anytime. And I'll place it. And then at lunch break, I can see whether it got executed or not. So it depends on what it did when the stock market opened. And most times they did, by the time I check it at lunchtime, it's executed.
So in that case, because you don't know when it's gonna open at the market, would it be best to place a limit order on that?
Yeah, it would. It would be prudent to set a share price, just in case the market goes berserky. Yeah. By the time it opens, usually doesn't go that crazy, but it could. So it's a good practice to set the limit order. Of course, most of the times when I do it, I'm doing an option trade anyway, and I have to do a limit order.
Okay.
So I'm not. If I'm just doing a swing trade, I can wait till the market opens. I don't need to do it after hours. Options are different because you want to get in, get out like within a day or so. So time is, as they say, you know, time is a factor on making money. So again, here are your choices, and this one says buy, the sell short, buy the cover. These two are option selections, and these two are swing trade selections. Buy or sell. For investing. So if you're an investor, you do the same thing. Even if you're just picking something that you want to hold on to for a number of years, you would still do it the same way. You would select one of these, you put your number of shares in, you put your limit price if you selected limit. There would be no difference. Whichever type of trader you're going to be, you would have to go through the same routine.
So that's, if I do the after hours trading at $5, and by the time the stock market opens at $7, that's what's getting executed at $7.
Yeah, if you selected market. If you selected market, by the time it opens and it's at 7,
yeah,
you just bought it at
I
7.
just bought it at $7.
If you selected 5 as a limit and you put 5 here as your limit price,
Yeah.
by the time the market opens and it's at 7, it won't get executed, it'll still be a hold. And if you selected good till close, then it would hold for that day. And then and if it didn't make it to 5,
Yeah.
it just didn't happen for you, you have to do it over.
Yeah.
I already said about logging your trades. This is my spreadsheet that I keep track of my trades going back to 2019 when I first started trading. And
You said something last week, and it said you don't buy a stock unless you can buy a certain number of shares. What was that number of shares?
well, my rule of thumb is if it's too expensive for you, don't buy it, because it's only worth it if you can make some good money off of it. If you're buying a stock that's $1,000 a share, most people can only buy 1 or 2 shares of that. and then you're using up your whole account on one stock. So where's the diversification in that? You want to, remember, you want to diversify. You want to have a blend of different types of stock in your portfolio. And in order to do that, you need to keep the share price low so that you can buy enough shares of the stock to make a difference and make money. So if you're buying shares of stock that's $10 or under, then that's a good thing. Because, you know, if it's $7 a share and you buy, 100 shares of that, well, you get, $700, that's not a lot. But if you only buy like 20 shares of it, well, you're not going to get much value out of that, even if the price goes up. So when you're swing trading, you need to have a decent amount of shares in the game to really make a difference, to generate some income. Because what's the point in buying a $7 stock and you only have 2 shares of it? It's not going to get you anywhere, even if it goes up to $20. If it goes up to 20, would you rather have 100 shares of that? So I typically do not do less than 100, 200. 50 is the lowest I'll go. 100, 200, 100, 25. Well, that's because that was in my daughter's account. So I was just doing that for her. But most of the time, it's 100 or more. 50 at the lowest. And the prices are, the share prices are cheap. These share prices aren't high. $8, $3, $6. I wasn't trading anything expensive. $2, 2 cents. $2.25, $6.58. Now this one was expensive.
What's that time frame that represents, that spreadsheet?
Oh, that's when I first started trading
Right, I know,
in 2019.
but, so that's.
The time frame was, this is all October, this is
okay.
November, it's like maybe 2
Okay,
months.
Okay.
Yeah. Remember, I didn't have a lot of money. I just used it all to go to school. So I had to look for these bargains.
So are you saying you wouldn't be doing that now?
Well, yeah, no. My average share price is closer to this one, which is around $38
Oh.
now. But I wasn't anywhere near that before. I was looking for the cheapest I could get. $2, all right, yeah. You gotta start where you gotta start. But you gotta start.
So then you commit like a certain amount of money
Yep.
each month to the stock trading, is that how you do it?
Yeah. I typically, on average, like I said, keep my account around 5,000, no matter how much I make. I'll transfer out money to keep it at around 5,000. I don't like having, some people have accounts that got, 30, 40,000. I think the highest my account's ever been was like 39,000. It was at 39,000. And I said, why am I keeping all this money in here? And I need to transfer it out, pay off some debt, and do some other stuff. So I started switching it over. So $5,000 is enough.
Because when you're not trading, you're not earning interest on that money, right?
No, no.
That's not trading.
Mm-mm.
Because that's what I thought. I know my Schwab account doesn't give me any.
Oh, no, you're not getting any interest on any broker account. Just like you ain't getting any interest if you have it in the bank. So you might as well have some of your money transferred to your checking account so that you can, use it for stuff that comes up. Like get emergency, I had to buy a dishwasher, yada yada. Like today I got to buy some parts for one of the cars. Stuff comes up. And if it's all in your broker account, But you can't really use it for stuff that comes up until you transfer it to your checking account. All right. And now, warrants. Warrants, I wanted to tell you about these. Warrants are kind of like options. So if you're not ready to do the options thing, because Dennis hasn't taught you how to do it, warrants is similar. You could buy a warrant on a broker exchange like Schwab or TD or E-Trade. It has a stock symbol. And what a warrant is, it's like an option where you have the right but not the obligation to buy the stock. So in other words, it's a contract, like an option is. However, unlike an option, a warrant is a contract issued by the actual company that you're buying the stock in. Whereas an option is a contract that's on the Chicago Exchange Board. It's traded publicly in the Chicago Board of Exchange. A warrant is issued by the actual company. And you can get a contract. Now here's the benefit of a warrant. A warrant, now warrants could be fairly complicated, but to invest in them is not really complicated. You buy it just like you were buying any other stock. The difference is it has an expiration, like an option does. So warrants don't last forever. So there's an expiration date, which is usually months to years long, and could be up to 15 years. And what you're doing is a company will issue a warrant because it's fairly new as a publicly traded company. And if you feel that that company has the potential to be the next Google or Amazon, you're getting in at a really, really, really cheap price at the beginning phase of this company's existence as a public company. And that's the benefit of having a warrant, because when the warrant expires, you could really get paid big time, because now the warrant turns into shares of stock. And if that company takes off, those shares of stock are vastly more valuable than what you paid for the warrant. Warrants are very cheap.
So can you still research these companies like you would other stocks?
Yep.
And every
You can put them in Google Finance or Yahoo Finance. You can look them up and get the same fundamental information.
Every company offers it?
No.
Okay.
There's actually only a few companies that issue warrants. It's not many, only a few. But you can find out who they are.
So let's say you have the warrant expires, and all of a sudden, the stocks are more valuable. Who gets the first grab at that? You do.
Yeah,
Okay.
you get paid.
Explain, please.
So if you bought a warrant for $2 and the expiration is 2 years from now, in 2 years they issue their stock to the public at $10 a share. Well, now you've just cashed in your $2 a share for $10 a share.
But it expired.
Yeah, but they have to, at the time of the expiration,
Right.
they have to convert it. In other words, during that period of time that you were holding it, they went from 2 to 10. When yours expired,
Right.
they got to pay you the difference of 8.
Upon expiration, they
Yes,
give you the difference.
upon
Oh, I didn't
expiration.
hear that part. Okay.
Yes.
That's the,
Yeah.
there you go. That's what I want to hear.
Yeah.
So you don't have to do anything.
You don't have to do anything.
Upon expiration, they pay. Okay, that's
Yep.
different. That's good news.
They pay. And now you have to wait till it expires. Unlike an option, you can close at any time you want. These, you got to wait till the expiration date. So if that stock moves from the $2 you bought the warrant to $10 at the time it expires, you get paid to $8.
And you don't have to do a thing. That's,
Nope.
they're just gonna pay you.
Nothing.
I like that.
But if the company goes belly up, then you lost.
Yes, you lost your $2. That's right.
But they're few
So
and far
sorry.
between, you said. They're few and far between.
Yeah, there's not a lot of companies that issue warrants.
So you can get a warrant, sorry. You can get a warrant for a company that's still private,
Yeah,
and then once they go public after the
Yeah.
expiration date.
it's kind of like, they're not like totally private.
Okay.
They're semi-private, meaning that most warrants, they're only public to the extent that there's a equity company, kind of like Radwell. There's an equity company that has invested in them. So they've gone private because they're part of this equity. So they're part of the public part of them is because they're partially owned by this equity company, which enables them to have a warrant.
So how do you find these companies?
Google is the most awesome thing on the planet. You can find anything on Google.
We just Google companies who are on.
Companies that have warrants.
Got you. Okay,
Boom. Bang.
good. Good.
Unbelievable. You can find out anything.
Okay.
Yeah. Well, here's a couple of warrants that I have. Lion Electric and Lighting E-Motors. These are both EV companies. They're involved in electric vehicles. Look at those prices, y'all.
Oh, wow. Yeah.
Hello. 68 cents?
Wow.
I'm buying a ton of that. $1.39. Now look at this chart on the line. Line went up to almost $70, 70 cents, past 70 cents. And now it's down flat again. But it's not going to stay there.
And that's
Now you can do your fundamental research. Just don't take my word for it. Do your own research. Look them up. These are both from Yahoo Finance. Both of these screenshots are taken from Yahoo Finance, so they're there. Lightning E-Motors, ZEV is, all you need is the symbol. ZEV is this one. And this one is LEV.WT. Most warrants have a W. I'm surprised this one doesn't. But most warrants have W to indicate that they're a warrant. So one of these is more with, has to deal with more the charging station, and the other one is actual vehicles. This one is more commercial vehicle, EV for commercial vehicles, they're not in the passenger vehicle space, they're in the commercial vehicle area. Buses, trucks, stuff like that. There's rumors that UPS and Amazon and them are heading in this direction because it's costing them too much money, because gas prices are crazy, and it doesn't look like it's going to be any relief on the gas prices because Russia's playing hardball with their gas. Saudi Arabia, what are they doing? The same thing. They're playing hardball with their gas. So we're stuck. We don't have much leverage with either one of them in negotiating them to release more barrels of oil to us. So I think the United States' option is to get away from gas, period. Should that happen, and these are long-term things. Remember, the expiration, and you can look up when the expirations are on the warrants. But they're probably in a couple of years. All right? So you're gonna have them for a while if you decide to get it, or whatever other warrant you decide to look up. Okay? Any questions on warrants? Okie dokie. Now SPACs and warrants are closely related. So the special acquisition purchase, which is a SPAC, usually a SPAC deal will result in a warrant, because special acquisitions are equity firms that invest in a company, and then when an equity firm invests in a company, they want to take it public. And the fastest way for an equity firm to take a company public is to do it as a SPAC. And when they do it as a SPAC, typically a company will issue a warrant. Now these were SPACs. They're probably not SPACs anymore when I took this slide of these particular companies. I don't invest in SPACs pretty much. I stay away from them. But I do like warrants. And I like warrants because they work like options. And I like options. Okay. SPACs are cheap too. So if you Google SPACs that are what companies are going to go public, if you Google which companies are going public via SPAC, boom, they'll come up. And then you can decide whether you want to get involved in that or not.
And if you have a company that you want to know if they issue warrants, what verbiage do you use for that? Like I have one in mind, like the one we talked about last week. Like
okay.
charge back.
Oh,
The one
okay.
you said you wouldn't touch with a 10-foot pole.
Yeah, they're not doing good.
They're not doing good now, but
Right.
if you purchase the warrant, when someone needs to use them.
They don't have a warrant. They're already public.
Oh, what you said it was, the first one you said was private.
One didn't come up.
Right, that was the one.
But
you
then
said
I
was private.
looked, then you said they were owned by so-and-so.
Right,
And we looked that company up.
right, but if they're still private, the other one, is that
Yeah.
why it didn't come up because they're private?
Yes.
Okay, and they had an acquisition, okay.
Yeah. So they haven't issued a SPAC, they haven't done the SPAC, they haven't done a warrant, nothing. They're still private. So you can't invest in them at all.
If they're private,
Yeah, if they're private.
and you can't pay a warrant, I thought, okay, I must have misheard you.
Yeah, no, you can't invest in them if they're private. Now, if somebody owns them, who's public, like we looked at,
Right,
you can invest in that company.
and so how would I tell whether or not they had a warrant?
Oh,
Yeah,
well, typically, the stock symbol will have a W if it's a warrant.
oh,
It'll say blank, 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 dot W.
okay, you mean the symbol and then dot .w? Okay,
Mhm.
all right, thanks.
Typically, that's how they use it.
Thank you.
We're gonna skip that because we're getting close. All right, so we're gonna get into options, and next week is gonna be all options. But before I get into this, who has a stock that we need to look at? Who has a stock that we haven't looked at and we should look at? Anybody have a stock they want to look at?
How about Nutrisystem?
Okay, what's the,
The symbol?
yeah,
Gosh, I think it's NUTRI. I think.
is Herbalife the same as Nutrition? No, okay.
Oh, that's the one I had.
What,
Herbalife.
Herbalife?
Yeah.
Oh, well, we'll look at this one since it's up, and then we'll look at Nutrisystem.
Yeah.
That's not that bad, $16?
I mean, I can't afford it. Not for like.
Okay,
Yeah.
well, we'll look at it anyway. So you did your fundamentals, so now we want to look at the technicals, because we all know what Herbalife does, right? Most of us, I'm sure. So let's look at the chart. And wow. That price has gone down, hasn't it? in August is it was at $30. Now it's half.
Do you think, because my idea, since it was at $30 at one point, would it be good to buy now that it's low and sit on it for a few months?
Yeah.
And when
Let's look
everybody
at-
makes the New Year's resolutions, they'll
Right.
probably,
Exactly, that's what I'm thinking.
Maybe, yeah. Let's look at, okay. So this is Natasha's stock here. So the moving average is going up, which means that the price, the simple moving average price is on the upswing, which you can see here. Okay? This is the momentum, and it's kind of, it was going down, and now it's going more closer to buy, but it's kind of flat. Here's your moving average convergence, divergence, and it's crossing here, and it's crossing with green on top of red, which means, in my opinion, there's going to be more green candles. And the volume is that's a pretty good bar for volume right there. Let me put my cursor on it and see how many people are buying it. That's a green bar, which means people are buying. 255,000 people are buying this stock. The MACD's crossed. The momentum is up. Well, the momentum is flat, but the moving average is up. So, yes, in my opinion, that's a good time to buy it for swing trading. So, Natasha, if you have $150, you can buy 10 shares of that and make money.
But is that good to do? Because I mean, it's not.
Well, it's up to you.
Okay.
Can you afford to lose $150?
Yeah.
Okay, then it's good to do.
Okay.
so even though it's not 50 shares or 100 shares.
Not 50 or 100,
But in swing.
but all she can do is afford 10. Then I say, well, go ahead and do the 10. I mean, if this is going to get your feet wet,
Right.
then get your feet wet.
Okay.
And if you can afford to lose $150, then it's no skin off your back, whether it doesn't do what you expect it to do. But according to what I'm seeing, this is going to move up. Now let's do our support and resistance to see where it could go. So this is a 1 hour, 1 month chart. Now let's look at 1 hour, 1 week. Okay, here's the 1 hour, 1 week. So let's look at 30 minutes 1 week. All right. So every 30 minutes is each candle. And it looks like right around 15, where it's at now, is the floor. Now let's go back to the 1 month. And the ceiling is up here around 18. And let's look at let's go to 1 hour. Back to 1 hour. Again, your support looks like it's around 15.30, and support is way up here. Here's your support. It's at 21. And how long ago was that? It wasn't that long ago. Yeah, it was in October. End of October. So if you get in now, which is on the cusp of 16, and you don't have a problem losing $150, then you could put your stop loss at 15. And if it goes to 15, that means you lost $150. But from what I'm seeing, I think it's going to head back up to the 20. And if it does, you've made $5 a share, or $50, because you bought 10 shares. You invested 150, you made 50, so now you have 200. Got it? All right. Good pick. Okay, anything else? All right. Well, thank you all. And we are going to do options next week.
I might have to.
2 hours of options next week. Okay? All right. Heavenly Father, we just thank you for this day. And we thank you for this class. We ask your blessing upon our week that's coming. Please prepare us to learn even more about your kingdom and about how to manage money, which you spoke a lot about in your word. We just give you honor, praise in Jesus' name. Amen.